What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 27. It's July 18th, 2023. We made some trades today, so let's get into it. So first thing first, let's talk about the important levels that we have on the chart. We only have one of them today, and that's yesterday's closing price, and that'll be right here, this purple line at 34,763. Now we passed above yesterday's closing price during the pre-market, and from that point forward we never look back. So let's start our analysis over here at 9:40, about 10 minutes after the market opened. Actually, because the market actually moved so much today, I'm gonna actually do my review from the live chart instead of using a screenshot, because we need to kind of stretch the prices up and down a little bit more. So let's actually bring it back to 9:30 this morning when the market opened. So we see that before the market opened, we were pretty much trending below yesterday's closing price, but we eventually came back, hit that level, and actually, hold on. This was the closing price for the day before yesterday, so that's interesting too. We were trading below the closing price from yesterday, and then when the market opened, we came back to retest the closing price from not Monday, but from Friday. And then we bounced all the way back up to yesterday's closing price. So that's interesting how the day before yesterday's closing price and yesterday's closing price interact with each other. That's pretty interesting, actually. I didn't even notice that before. So let's continue moving on. So after 9:30, we break up past the zone that we established in the pre-market. We break above yesterday's closing price, and then that's where we pick up where I was talking about how we never look back. So huge move on the open. We establish a higher low. You know, when I see a higher low, I like to draw my level of support based on the lows at a higher low, and then use that as a reference to go long from. Now, in today's occasion, I actually originally had my circle down here, and I also had my line of support down here, because I usually like to draw it on the lowest level of the wick for that higher low. But in today's case, they came back more so to respect the bodies rather than respecting the wicks down below. So that's why I moved it up here to this location. So once we see prices come back, retest the higher low level of support, we see prices continue on and start moving up. Now this right here, trade one, represents what I typically like to see in a post pattern. Now I was telling you guys about post patterns yesterday, and I actually want to get a little bit more into that, because yesterday we took some post patterns that didn't necessarily work per se. And the reason that they didn't work was because the market conditions weren't exactly as perfect as we wanted them to be. But today we actually had a textbook post pattern, so I wanted to break that down. So remember, if you guys remember the notes from yesterday, when it comes to a post pattern, that first candle is very important. That first candle has to be made on higher volume, and it has to be a candle that has an extended range that barely has any wick at the top and barely has any wick at the bottom. Best case scenario, you have no wicks, but sometimes it's not always like that. But in a scenario where you have a little wick like this, so we closed at 39 and the high was 41, so that means that the wick was only 2 points. And in comparison to how big the body was, we opened at 808 and we closed at 839. So this is a 31 point candle with a 2-point wick. So this candle definitely qualifies to be that first tall body that we're looking for. So let's actually go back to the notes real quick and talk about that. So this is July 18th today. This is yesterday. All right, so this was the example from May 5th that I was showing you guys yesterday. Let's go back and reference that. So remember, when you have a post pattern, the first thing that you want to see is a tall body candle with little to no wicks on the top or the bottom, and this candle also needs to be made on very high volume. All right, so when we go back to today's session, that satisfies all of those requirements perfectly. Tall candle, high volume, little to no wicks. So cool. First candle checked off. So now we need to move on to the second candle formation. So remember, that second candle formation needs to be almost a perfectly square type of candle with preferably wicks on the top and the bottom, because that shows you that there was a lot of volatility within the span of that candle, which is giving you a good sense that maybe prices have a little bit more to run. Now, hold on, my fills and my trade lines are kind of getting in the way. So this right here is a representation of a perfect second body candle where is more of a square. You got wicks on the top and the bottom. So if we go back to our notes, look at how candle 2 right here is pretty much almost exactly the same as what we saw today. Very squarish. It doesn't move too far, which means that the move still has room to run. Because let's go back to yesterday's chart. Where was it? Okay, so on trade 3, I traded a post pattern also. So let's zoom in and talk about that. So remember from yesterday, I was telling you guys how when I went long right here after thinking that I saw a post pattern form on this candle, it wasn't necessarily the best entry, and today is giving me a lot more clarity as to why that is. So remember yesterday I told you how this candle, the second green candle, actually moved too far too fast. And whenever that happens, that tells you that whatever move is going on, it's pretty much run its course and now it's time for a pullback. But when you see a smaller, more of a smaller body candle that doesn't travel as far in terms of price range, that lets you know that it's still a potential move that can still happen. And that'll usually come in the span of multiple little small body candles like that. So if we go back to today's example, that's exactly what we were able to see. Once we got that small body, look at how the candles continued to move higher and the momentum continued to flow until we finally got up to a major level of resistance. And that's usually what happens when it comes to post patterns. The price is going to run and it's going to be all green candles until you run into a major level, which was what we saw up here at 34,900. Those 100 levels always serve as a major level of either resistance or support, depending on which way the market is moving. So once I saw that second body candle form, all I did was go long on the close of it, which is exactly what you should do when you see a post pattern that's completely legit. Now notice how the volume for that first body, if we go back to that, let's actually look at those volume numbers. So, okay, the volume for the tall body candle number 1 was 517. Now, if we look at the volume for the candles that came before, let's just get a rough estimate of what we saw. So we saw a 248 candle before, 459 a couple candles before that. So that's comparable. But 330. So we had 330, 450, 248, and then 515. So for us to go from around 330-ish, 248-ish, we average that out. We can call it around, what, 280. So we went from an average of around 280 to 517 the next minute. So that's telling us right there that volume has come into the market. And whenever volume comes into the market, that just gives you more confirmation that this trend does have room to run. So let's bring back up our entries. So once I saw that, I went long at the close of that candle and I just took it back up to my scalp target. Now, when it comes to exits for a post pattern, you can actually hold this trade for a considerable amount of time if you want to. Now, me, because I'm a scalper, I just like to get my scalp target and then I'm out, and I prefer to get back into the move if I still see that it's continuing to pursue and push higher. But if you want to hold this trade, you could have potentially held it all the way up here until you saw this red candle get formed at 900. No matter what the scenario might be, whenever you see a red candle, the post pattern is finished, and that usually comes around a major level of resistance, like I was saying before. So always remember that when you're looking to get out of a post pattern. And before we move on, let's just quickly go back to our notes and see if it's anything that we need to compare before we move forward. This was yesterday, July 17th. Nah, for the most part, I think we're good. So on trade 2, I went long here expecting for 35,000 to be tested. Now I need to remember to only buy high in specific market conditions. Now this is what I mean. So trade 2 wasn't necessarily a post pattern. It was a variation of it, which I call a continuous bull spike. Now a bull spike happens when it starts. Well, let's go to our notes and break it down. All right, so this is a bull spike. Now, a bull spike is established after the candle of close 3. Now, that's for this example, but it's also for all other examples also. You get 3 straight candles to the upside with high momentum. Well, not high momentum, but a high range, meaning that each candle moved a considerable amount of price range, I guess, and they were all significant. So you want to see 3 of those candles form, and then that's when you know that the bull spike got started. So you could go long at the close of candle 4, or you could go long at the close of candle 3, but you want to make sure that you have a 1 candle wick pullback. Now, on this example from April 28th this year, at the close of candle 3, we didn't have any wicks on the top side. So even though we saw the bull spike being formed, we still couldn't necessarily go long right then and there because we didn't have a pullback opportunity. Now, candle 4 was the first candle that actually gave you a wick after the bull spike had got established. So in this scenario, it would make sense to go long at the close of candle 4 and then either hold it to your scalp target, or you could hold it up to a major level of resistance, or until you see that first red candle. So if we go back and look at today's session, trade 2 right here came after a bull spike got established. So the bull spike was established after we had 1, 2, 3 candles to the upside. Now notice how on candle 3 we did close with a small wick at the top. So looking back in retrospect, I could have potentially went long at the close of candle 3, and that would have definitely been able to let my scalp target be hit as prices came up to test the top of the zone, which we wouldn't have drawn it at that point yet, but we would have been able to draw it after we took profit from that trade. The only thing is where I went wrong on trade number 2 this time was I waited until the close of candle 4. Now, in a very strong bull spike, the quicker that you get in, the more likely it is that the probabilities of success will be on your side, because the higher that you enter in a bull trend, the less likely it is that the move is going to work for you, because you got to remember, this move is one of those moves where the move happens, and once it happens, it's over. So once you see it happening, you can't hesitate. You got to take action and get in and get out when you hit your profit target. So I think I entered a little bit too late on this one. And also, I think maybe I could have managed it a little bit better while the trade was open, because I went long right here at 982. We came up to about 989 on this candle. So I was 7 points in profit. That's not enough for my break even to get hit, but it is enough for me to really consider whether or not I want to hold on to that trade if prices come back to my original entry price, or if they start moving against me. Because then I can say, well, if they originally moved in my direction and now they're coming back, maybe I could get out and then just wait for a better opportunity later on to go long. So that's the biggest takeaway I got right there from trade 2. Get into the spike a little bit earlier, and if you get in late and you still see a profit, think about maybe cutting your trade at break even if it comes back to your original entry price. So then let's move on to trade number 3. I went long right here as prices came back to my entry from trade 2. So usually that's one of my favorite setups that I like to take. If I took a trade that I felt was in the direction of the trend, but it didn't necessarily work, if prices spike back through that original entry price, you take that same trade. So I was able to do that on trade 3, but my exit could have been a little bit better. If I knew that this was the top of the zone, I should have been getting out right here, but I was expecting for prices to continue moving on higher because the trend was so strong, and we had that 35,000 level right above it. Now, sometimes when you come to a major level in the market, you could just run straight up to that level. But sometimes, like we see today, you'll have scenarios where you might come 10 points close to that level and then pull back, let the market kind of refresh itself, let all of the new buyers that want to participate start putting their orders in, and then you see that move back up to that level. So don't always think that prices have to immediately go to that level because they have momentum and they're moving that way. You always want to play it how it goes, and don't just assume that it's doing anything or going anywhere. You always want to make sure. So that comes back to patience and confirmation. Always make sure that your trade is legit. Don't anticipate, react. So that's the biggest takeaway from trade 3. My exit could have been better, but I still closed it out for a small profit, so that's not too bad. So then let's go on to trades 4 and 5. Now, right here, I definitely got a little bit too excited, and I went long, but I quickly turned the trade as it turned negative. Now, I say I got too excited because I saw how strong the trend was, and I know on days like these, it's only a matter of time before the trend starts to continue, and it's going to continue very strongly, more than likely, based on the price action that we've already seen. So I'm like, okay, right here, prices are about to move. Let me get in and let me ride the wave up, which, going back to yesterday, is just not the right idea. Even, I think it's in my notes somewhere on a later trade, on trade 7 and 8. Just read this last sentence. It says, you still need to be patient in a strong trend. And that's so true. And that's what I learned on trades 4 and 5. It's like, look, yeah, you know which way prices are going, but you still got to get that best entry. You don't want to settle for just any old price level, because that can leave you open to, maybe you won't take a loss, but maybe you'll have a potential negative trade that goes a little bit further than you wanted to, but then gets back into profit, which is risky, because on days when it's not built like this, you might have to take that bigger loss and you might not be able to make it back. So today it was cool because you could use a wider stop because the trend was so clearly defined, but I usually don't want to do that. I want to stick to my tight stop that I use, and I want to get in at the best possible price level. So even when you know the trend is going one direction, still wait for that best level to get in at. So at trade 4, I went long a little bit too early, but then on trade 5, I bought it again towards the lows of the zone. Pretty much got stopped out for break even. Well, not break even, it was a 5-point loss, but I would say that's more of a small loss. So it's okay. So it's okay, because I'd rather take small losses than take my full stop loss if I see that the trade is not gonna work. And I'm like, hold on, it's not gonna work. Don't take the full stop loss. But let's see. So that was trade 5. Pretty much went long at the bottom, but scratched it pretty quick. Now on trade 6, I went long at the zone's lows, but I cut it quickly as prices turned negative, which was the same thing I was doing on trade 5, because I know that the trend should be moving up, but if it's not moving up immediately as my trade gets entered into, and I think that I got in at the right level, then I cut it quickly, because most of my trades, when they work for me, they start working immediately. So if I don't see that immediate reaction in the direction that I want, I'm like, you know what, let me just cut it and look for a better opportunity. Now on trade 7 and 8, I made the same mistakes that I made on 4 and 5, where almost exact carbon copy of it, where I bought too high and then I bought again at lower prices, but it just wasn't time. So I ended up having to take 2 losses on that one, and that's not what I was really trying to aim for right then and there. But hold on, let me lock these. I don't want them moving around too much. Okay, it's locked. What was I saying? So yeah, I made the same mistakes from trades 4 and 5, but you always want to make sure that if you did something before in the market and it didn't work, if you do it again from the same price levels, more than likely you'll get the same result. So that's what I ran into on trade 7 and 8. I had to take 2 losses because of that one. So that pretty much gave back a lot of the profits that I made off of trades 1 and off of trades 3. So pretty much I'm back at break even after that trade overall on the day. So then we continue moving forward. What's interesting is that whenever you have a consolidation zone, for that zone to get broken, you usually have to have a major type of price pattern that pushes prices out of that zone. And that's exactly what we saw today, because we saw a double bottom get formed right below the zone. That double bottom had enough momentum to push prices up into the zone, and then really we formed a higher low right here. Now it doesn't look like it because the trend was so strong, but you got to read the wicks. Notice how if you start at the swing low, we push higher, and then we created a swing high right here at 981. We pull all the way back down to around, the low for this candle was 973, and the low for this candle was also 973. So we went from 81 back to 73. Now that's not that much of a move. It's only 8 points, but because the trend was so strong, that's what counted today as the higher low. So let's go ahead and circle that up. Now when I was trading this in real time, I thought about circling this up and using that as a higher low, but I was like, you know what, I feel like maybe I'm trying to stretch it and trying to push the issue saying that this is a higher low. Let me wait for something that's a lot more clearly defined. And that's exactly what we got on this next higher low as we came back to test the top of the zone. So notice how this higher low was a lot more visible, where you have a clear swing high and then a clear swing low, and then we move away from that level. So as we came back, we retested that price, and I actually missed out on that move too, which sometimes in a strong trend, you won't be able to catch all of the moves, and that's okay. Just as long as you don't chase the market and try and buy at higher prices. If you miss a move, just wait for the next best opportunity, and then when you get that, then you can execute your trading plan and make whatever trades you need to. So you know how I like to trade higher lows. Whenever we have that level of support, we draw it based on the lows of that higher low. Hold on, y'all. 1 second. Okay. So anytime you see those higher lows, you want to wait for support to come back and retest it, and that's exactly what we saw on the green candle from 1031 right here. So after that, really, if you wanted to, you could also draw a channel line from a trend line, from the lows of this double bottom, connect it to that first higher low, and then extend it throughout. So let's actually put that up there. I didn't use this trend line today. I thought about it, but I was like, nah, just trade off a price action. But if you would have used this trend line, you could have actually been pretty successful throughout the day. Notice how it actually gave a lot of good touches. It gave you 1, 2, and 3. So if you wanted to, you could have definitely used a bull trend line today. So once we see prices break out of the zone and come back and retest it, we see prices come up, create another higher low, which only confirms to us more that the trend is definitely moving up, because not only is this a higher low above the zone after we broke out, but it's also a higher low exactly that occurs at 35,000. Now 35,000 is a major level, because not only are the hundreds super strong important levels like 900, 800, 700, but those thousands on the Dow Jones, they make a big difference. So 35,000, 34, 33, 32, you'll always see a lot of price action, well, a lot of momentum and a lot of activity around those price levels, because there's so many people either getting into trades, getting out of trades, or looking to position themselves for the future based on those round number 1,000 levels. So for us to have a higher low right on top of that level, that's very significant, especially for the uptrend that we're already in. That shows us exactly where we should be moving, which is to the upside, and that's what we saw when this next higher low got formed. So after we formed this higher low, that actually led us into trade 9, because I saw another post pattern start to form up. So let's go ahead and look at the volume for that post pattern. Notice how the volume on this candle is significantly higher than any other candle next to it. Where's my circle? Come on, circle. There we go. So let's look at the volume. So the volume for this candle was 474. You compare that to the candle before, we had 43 contracts that got traded. 187 the candle before that, 226, 110, 124, 101, 252, 243. So for this candle to be 474 in comparison to what we had in terms of volume in these past couple of minutes before that candle, that tells us that momentum has come into the market. So whenever we see momentum come in, we have our typical candle, right? Tall body, no wick on the bottom, very small wick on the top. So boom, okay, that's checked off. Candle number 1 is legit. So now we look for follow through on candle number 2. Now for a minute, this candle was actually very red, and the post pattern was invalidated if it would have closed like that. But because it closed as a green candle and it was a little bit of a smaller body square, remember that's what we look for. Now I didn't have a wick on the top like we usually like to see, but you don't have to always have a perfect second candle formation. As long as that candle is green and it's a small body that closes on top of the opening price for candle number 1, that's pretty much a legit post pattern, and you want to go long immediately on the close of that candle. So that's what I did right here. As soon as this candle closed, I went long at that same price at 35,034, expecting for the move to continue, but prices kind of stalled out a little bit, and I just cut the trade for break even because I felt as though it was a little bit shaky. And that's something you always want to remember for a post pattern too. When you get in on that close of that second candle formation, you want to see prices go in your direction almost immediately. And if they start to hesitate or if they turn negative, you want to seriously consider maybe getting out of that trade and waiting for a better opportunity, because this pattern usually should work immediately. So that's pretty much what I was going through right there on trade 9. Let's go back to the notes and just make sure that that's what that says. Yep, went long after seeing a post pattern form, break even, stop, got hit. Now on trade 10, I went long in an uptrend after seeing another post pattern form. So that was pretty much the main theme for today, was a whole lot of post patterns all across the board. And that tells you what type of market you're in, because if you see multiple post patterns, that pretty much means that the trend is super strong, because these post pattern continuation patterns only work in a market like this where it's super trendy. Remember how yesterday the market was trending, but not as strong as it was today. So those continuation patterns were not as successful yesterday as they were today. So on trade 10, we saw another post pattern form. So check this out. Notice how the first tall body candle is formed on significantly higher volume in comparison to the candles that we saw before, right? Now on this candle, the wick was a little bit bigger than what we like to see, but because we already knew that the trend was pretty strong, we already saw post patterns that worked previously. That meant that more than likely prices were not going to stall out right here. The trend was going to continue. So I just took a chance on that one, because I'm like, look, we opened this candle at opening price was 35,032. The high was 52, and we closed at 45. So a 13-point candle with a 6-point candle wick. It's like, if you wanted to pass on that opportunity, I could understand why. But you also want to make sure that you take market context into consideration, because if you pass on this entry, then if you don't want to go long, that means that you're probably thinking about going short. But you could definitely immediately eliminate any idea of going short right here. So it's like, okay, I'm not sure about the long, but I definitely don't want to go short. But if the trend is super strong, then you just got to ride that. So that's pretty much the thought that I had, which made me want to go long right here at trade 10. That was the thought process behind it. So once the second candle formed, it was a typical square body that we like to see. The wick was a little bit taller than I wanted, but since the wick on this candle from before on the first body was an exception, I made an exception for the second candle as well. And as soon as that candle closed, I went long at the close, pretty much at that same price on that next candle, and then just took it up to my scalp target. Now, notice how I could have held that trade, and actually maybe, I think I got out at 70. I could have held this trade all the way up to about probably 82, because once I saw this red candle, I probably would have got out. But I could have got another, 10 to 15 points off of that. And that's just a very interesting thing when it comes to post pattern. You could take your scalp target, or you could hold it for really as long as you want to until you see a major sell signal start to come in. And for a post pattern, you want to sell immediately if you see a red candle, or if prices hit a major level of resistance, or if they hit your profit target. So any one of those three that you want to choose is a good way to get out when you're dealing with a post pattern. And after that, that was my last trade for the day, and we pretty much see prices continue to move higher throughout the rest of the day. And more than likely, I don't know, it's kind of shaky. I don't know if we can bounce back from this, but doesn't matter. I'm done for the day. So let's go back to our screenshot. So overall, I would say today I did okay. I saw my patterns that I like to trade, and when I saw the confirmation, I took my trades and I executed. So I think I did a good job on that, but I definitely need to clean up those trades in between my trades that were working. So trades 2, 3, 4, 5, 6, 7, and 8. I think those trades were me just being a little bit too impatient. Like, it's like, look, okay, when you have a trade, when you have a trend that's really moving the way you want it to, be aggressive. But as soon as you see that momentum starting to die down a little bit, just be patient. The trend is the trend, and more than likely the trend is going to resume, but you got to get a market time to breathe. You got to get a market time to reset. And then once you see your bullish price patterns, like today we saw the double bottom that eventually got us out of this consolidation and pullback. So that's what you want to look for. You want to look for a major bullish sign that's telling you that the uptrend is about to resume, and then you can start being aggressive once more and once again. So I think that's the biggest takeaway I learned from today. Make sure that even if you take your best trades, don't give back a lot of that profit. And also, I just want to make sure you guys understand the difference between certain market scenarios where you should use continuation patterns and when you shouldn't. Today is a day where you should, because we can clearly see which direction the market is moving, and there's no doubt about it. But go back and compare it to yesterday. Yesterday was also trending, but it was a lot more consolidation. So you want to more so look for pullback opportunity entries and trends like this, rather than continuation opportunities where you're looking to buy it at the market at whatever price it's offering at that moment. So I appreciate you guys for tuning in with me today. I think we learned a lot about post patterns, so I hope you guys did too. I'll be back tomorrow on July, 19th. But until then, you guys, take it easy.